We're seeing something really interesting here in profitability metrics across global equities. So what we're looking at here is the bonus chart from the weekly S&P 500 chart storm write-up. We've got the link to that in the description. But the chart here is showing the return on equity. And as I noted, we're seeing some fairly stark recent developments in profitability trends across the major chunks of global equities. And so specifically that's US equities, emerging markets, and developed markets outside of the US. So the USA has peaked but remains on top. Emerging markets is middle of the pack but accelerating higher, and the rest of developed markets has rolled over from fairly typically mediocre levels. Now, in fairness, ROE, or return on equity, is inherently a backwards looking metric. It looks at historical earnings in relation to owners' equity, and in practice it does tend to actually lag the market. But that does not mean that we should ignore it. Return on equity trends can help reinforce price trends. We can also at times extrapolate nascent trends in return on equity around turning points. And it also helps to understand price performance and valuation differences across different equity markets. In this respect, the fact that developed markets are turning down basically gels with the notion that recessionary conditions appear to be developing and helps understand some of the weakness that we've seen in the stock market this year. But emerging markets have not really performed that well either this year, and that stands in contrast or at odds with the improving trend in emerging markets' return on equity. And for those who are curious, the sectors within emerging markets that have seen the biggest lift were industrials, energy, and materials. So these are your commodity and manufacturing related sectors, which I think makes sense given the macro backdrop, with commodities surging and manufacturers responding to the demand shock and the backlogs. And actually really important thing to note as well for reference is that emerging markets, in terms of their sector weights, has a larger skew to these old cyclical sectors, much larger than the US or developed markets, ex-US. So for instance, the US has a much greater weighting to the tech sector. So out of interest, the return on equity has actually been rising across most emerging market sectors. The only exceptions are healthcare and consumer discretionary. So it actually is a relatively broad-based pickup, but particularly accentuated in those commodity manufacturing sectors. It's also been rising across most countries within emerging markets. The key exception there, though, is China, and China's been facing multiple macro headwinds. I've talked about that elsewhere, and so, you could argue that is one opportunity for this metric to get better, is if they start doing stimulus and start to turn their economy around. But to sum up, it's a pretty curious chart, a curious development with regards to emerging markets in particular, and something to keep in mind as emerging market equity valuations and sentiment reset further lower. So if you like this chart, definitely subscribe to the ChartStorm Substack. We put out 10 interesting charts each week there on the S&P 500 and related markets, as well as a bonus chart like the one that we've looked at today.